Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets of the corporate world. And today we've got a filing that hints at a pretty interesting, shall we say, construction detour, turning into a high-tech journey. Let's dive into what JFB Construction Holdings has been up to. So, JFB Construction Holdings, which you might know by its stock ticker JFB or just by its name, has filed a Form 8. Think of an 8K as a company's way of telling the world about big important stuff that is happening right now, things that aren't typically covered in their regular quarterly or annual reports. It is like a special bulletin board for investors. This particular filing is a current report, and it's all about some significant agreements and events that just went down. The date of the earliest event is the 13th of February 2026, so this is super fresh news. Now, JFB Construction Holdings is a Nevada-based company, and its stock is listed on the Nasdaq Stock Market LLC. They're considered an emerging growth company, which means they get a little more flexibility with certain financial reporting rules. But the big news here isn't about their existing construction business, not directly anyway. The most important part of this filing kicks off with item 1.01, which talks about a material definitive agreement. In plain English, this means they've signed a really important contract. On the 13th of February 2026, JFB Construction Holdings, which we'll call the company, entered into these things called securities purchase agreements with some fancy investors. These aren't just any investors, they're described as institutional accredited investors. Basically, these are big money players. Through these agreements, the company is going to issue and sell a bunch of its common stock, specifically 802,000 shares, at a price of $12.5 per S-share. This whole deal is called a private placement. Private placements are a way for companies to raise money directly from specific investors rather than selling shares to the general public on a stock exchange. It's like a VIP club for investors. This private placement is expected to wrap up pretty quickly by the 17th of February 2026, and when it does, the company anticipates bringing in about $10 million before they pay their fees and expenses. After those deductions, they're looking at a net amount of around $9.2 million. Dominari Securities LLC was the go-between, acting as the placement agent for this deal. Now, here is where it gets really interesting and why a construction company is suddenly talking about securities purchase agreements. A part of the money they're raising from this private placement is going to be used to invest in a company called Extend Reality Expansion Limited, or Extend for short. This investment is tied to a bigger plan that's detailed later in the filing. This section, item 3.02, confirms that these shares were sold without being registered with the SEC. This is typical for private placements and is done under an exemption called Section 4, R2 of the Securities Act. It is basically for those sales that are not considered a public offering to everyone. And this is where the story really takes a turn. Item 8.01, Other Events, reveals what's really going on. On the 17th of February 2026, the same day this private placement is set to close, the company announced they've entered into a definitive agreement with Extend, and it's not just an investment they're planning to combine. Get this, JFB Construction Holdings and Extend are going to merge in an all-stock deal. This means no cash is changing hands between the two companies, only shares. The result of this merger will be a new US-based public company called Extend AI Robotics. Incorporated, this new company will focus on advanced autonomous systems for things like defense, public safety, and private security. They're going to be built on Extend's existing iExtend operating system, which they describe as battle-proven. So a construction company is essentially becoming a robotics and AI company. That is quite the pivot. They've included a press release announcing this combination as Exhibit 99.1, and also a joint investor presentation as Exhibit 99.2. These documents, which are incorporated by reference into the filing, essentially provide more details about this merger. Now, nestled in this filing is a very important section called the cautionary statement regarding forward-looking statements. This is where the lawyers step in to, let's say, manage expectations. They're telling everyone that a lot of what they're saying about the future, like the potential transaction, its expected impacts, and the timing of closing, are really just predictions. This means any statements that aren't about things that have already happened could be considered forward-looking. They list out words like may, will, outlook, expects, and plans as indicators. They're essentially saying, hey, we're optimistic, but a lot can happen, and things might not turn out exactly as we hope. They go on to list a whole bunch of risks, some known, some unknown, that could mess up their plans. These include the transaction not going through, difficulties merging the two companies, unexpected liabilities, diversion of management's attention, and not achieving expected cost savings. Interestingly, they still mention risks related to JFB's core construction business, like completing projects on time and within budget, changes in weather, tariffs on building materials, supply chain disruptions, and rising labor and material costs. So even though they're merging into an AI robotics company, the old construction risks haven't completely vanished. For Extend, a major risk highlighted is their dependence on a limited number of defense and governmental security customers for a substantial portion of its business. This means if they lose even one or two big clients, it could have a huge impact. They also worry about delays in government funding and programs, especially if there are government shutdowns. Competition is another big factor, as are changes in US and foreign laws that affect their industry, and of course, cyber threats and security risks are a major concern for any tech company. Finally, we get to item 9.01, which lists the exhibits attached to this filing. These include the form of the securities purchase agreement, the press release about the merger, the investor presentation, and the interactive data file. These documents provide the nitty-gritty details for anyone who wants to dig deeper. Looking at these documents, it's clear that JFB Construction Holdings is making a significant strategic shift. The private placement is essentially a bridge to fund the merger and perhaps provide some initial capital for the new entity before the full transition. The fact that they are raising $10 million in a private placement at $12.5 a share, and then using a portion of that to invest in Extend, signals a clear intention to combine forces. What's really noteworthy is the valuation implied by the private placement of $12.5 per S-share. If this is a fair market valuation, then the 802,000 shares would suggest a total company valuation of around $10 million from this specific placement. This also sets a benchmark for the all-stock merger with Extend. Now let's put on our analyst hats and look at this whole situation. JFB Construction Holdings, a company with a name that screams concrete and steel, is essentially morphing into Extend AI Robotics, Incorporated. This is a bold move. The $10 million private placement seems to be a way to get some immediate cash and perhaps shore up the financial position before or during the merger. The biggest risk here is execution. Merging two companies is always complex, and merging a construction firm with an AI robotics company is even more so. JFB has to navigate the integration of operations, cultures, and financial reporting. Extend, on the other hand, is heavily reliant on a few key government clients. Any disruption in those relationships or government funding could be a major setback. On the opportunity side, if JFB can successfully leverage Extend's AI technology and tap into the growing defense and security markets, they could be onto something big. The demand for autonomous systems in these sectors is projected to grow significantly. The private placement at $12.5 per S-share for JFB's common stock gives us a hint of their current valuation. The all-stock nature of the merger with Extend means that the success of the new entity will heavily depend on the combined company's ability to grow and generate profits, rather than a cash infusion from the merger itself. Our assessment is that JFB is making a high-stakes gamble on the future of AI and robotics. The risks are substantial, especially given the current economic climate and the dependence on government contracts for Extend. However, the potential rewards are also significant if they can successfully build Extend AI Robotics, incorporated into a leading player in its field. It is a transformation story in the making, but whether it is a grand success or a cautionary tale remains to be seen. Alright, that is our breakdown of JFB Construction Holdings' latest filing. Do you think this pivot into AI robotics is a smart move, or is it a risky gamble that could leave JFB in the dust? Drop your thoughts in the comments below. If you found this analysis valuable, please hit that like button, it really helps us out. And if you want more deep dives into corporate filings, make sure you subscribe. Don't forget to check out our Discord community linked in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.